Hi all, it's Catherine Burgess with Burgess Group Compass. We're talking about last week's Boulder County real estate numbers, the national second home market, and then the national rate increases for rent and mortgage payment increases and how those relate to our local market. So starting with new listings, last week we had 85 new listings. That was in alignment with the 2018 and 2019 numbers, a good chunk lower than the 2020 numbers. Then under contracts, we were at 93 last week. Again, that was a little bit above 2018 and 2019, but a good chunk below 2020. So from a month's supply of inventory standpoint, last week we were at 0.89 months supply of inventory. That is more the type of number that we typically see at the end of December. It's a very low amount of inventory for us. So that's in big contrast with the last 3 years. We need inventory. So from an year-to-date under contract perspective, the 2021 numbers are still higher than the last 3 years, though if we may be seeing more of a seasonal slowdown as we saw with those new listing and under contract numbers. You know, at this time in 2020, there was still a big head of steam in the market. So it could be that those 2020 numbers catch the 2021. We'll have to wait and see. From a price band perspective, last week we had a whole bunch of inventory come to market at the 2.5 and above. So that should feel like there's some good new shopping there. From the 1.5 to 2 million, and then from 0 to 500,000, there was an enormous amount of buyer activity. So those are pretty shopped out and have a 200% and 184% sell-through rate, respectively. Nationally, that second home market, as you recall, the pandemic brought all sorts of people to the table wanting to buy second homes. We saw that, as previously discussed, come to a low point during the summer. And we were at 40% above the pre-pandemic level during the summer. It has now, at the end of September, we've seen it head above 60% of the pre-pandemic level. So it's likely that second home market has bottomed. The greater inventory and lower prices, relatively speaking, that we were seeing there over the summer are likely changing and on their way up. Then from a national perspective as well, with rents and mortgage payments, rents are increasing and mortgage payments are increasing, but the rental increase is a little bit lower than the mortgage increase. But it's enough to be significant. It's calculated differently by different indexes, but what we're seeing is about a 4% differential. So it's likely that we will start to see buyers who can't make that purchase moving into the rental market. So the pressure on the vacancy rate, which is already pretty low, could become even more strong. So if you are someone who's inclined to hold investment properties, this could be a good time to get ahead of that increased demand that seems to be coming down the pipeline. So if you have questions about this, please reach out. I know there's some complicated stuff here. And keep in mind that 0.89% month supply of inventory, it is very low inventory. So in general, it could be a good time to come to market. We don't typically think of this as a time to stampede to market, but depending on where you are and what your product is, it could be a really smart window when there isn't anything else on the market and still is fairly decent buyer demand. Call us with questions. We are happy to be a resource as always, and please like, subscribe, and share. We'll see you again in 2 weeks. Thanks.